Okay, is that working? Is that working, folks? If anyone's left, let's see if the sound's working now. No, maybe not. I don't know if that's working for anyone now, but I've just tried to add to the stream. That seemed that might have fixed it. That's worked. Yes. Okay. Thank you. Let me just let the woman know. Okay. Oh, it's just dangerous, isn't it? When if you have the technical skills of a newt. And I'm using it's a company called which I've always used, StreamYard, but I use it so infrequently that I forgot. I just needed to click on the on a little thing down there, and then it started working. I'd be dangerous if I knew what I was doing, wouldn't I? Anyway, now a load of people have gone. But anyway, well, I don't really day trade anymore, but I was a decent day trader, but yes. Yeah. Well, I've always joked about that, AJ, actually, that I've half the time I don't know my way around my own charting software. um okay, let's get rid of that. Right. um and that is the truth. It's one of those things, isn't it? You don't need to know how the engine of a car works in order to drive it, and that's my excuse anyway. And so I use the bits that I do use. I can use a computer, but if anything goes wrong, I haven't got a clue. So yeah. In fact, I was loading up some new cards into my Apple Wallet earlier on, and it took me ages to get that sorted out as well. So anyway, shall we move on and actually talk about the markets for a little bit and have a chat, even though we've lost most of the people who were here? There's a few of us. There's a few of us. Right. Anyway, well, good evening. I know it's a bit late, but I just had what I was saying when I was talking earlier on is I just had my tea, and with the markets moving around the way they have been, I thought, oh, um, I'm sat in my office, might just have a bit of a chat, see who's about. And it's amazing, really. You set these things up and it just goes, you know, Charlie's Live sort of thing, and it must pop up on your phones or whatever. I don't even know how it all works, but you obviously get an alert and that Charlie's doing a live stream, and away we go. Yeah, I do know that much. But yeah, so I thought I'd have a look at this. So it's off its lows anyway, FTT. So the thing that I was talking to my traders about earlier today, I'm going to take this back and put it on Bitcoin for now. Um, when I was chatting to my traders this afternoon, or earlier this evening, even about this, is from what I can gather, yes, there's been mass exodus of withdrawals, but there's a huge amount of people that can't. They stopped withdrawals, haven't they? And so at FTX, and if your money is at a brokerage, or if it was in a traditional brokerage house, then your money is sat in your account. So it's your account, um, and that is ring fenced. If you're at a traditional brokerage house, then your money is in your account, and then you've got the broker over here within the context of the broker. But if the broker goes bust, so if the broker goes bust, it doesn't matter. Your account is ring fenced, because your money's just sat over there. The broker isn't touching your money. So what I'm gleaning here is that your money, so to speak, at FTX has been used elsewhere. because otherwise, why can't they just give people their money back? So that's yeah, that's what I'm gleaning from that side of of it all. Anyway, it all sounds or smells very fishy, doesn't it? So yeah, bit of a, and of course then you get the contagion effect of it affecting the likes of Bitcoin, Ethereum. Ethereum was down quite a bit today, 16% down at the moment. So you do get a contagion effect as well as it spreads. But you know, I'm an old school trader, so I'm not interested in some of these coins and the likes anyway. You know, even within the space there, I'm only really interested in the majors, the Bitcoin and Ethereum, really. Um, but again, a bit like Luna, it just sort of says to me that people don't understand that the illiquid the liquidity that's or lack of liquidity that's there in many of these markets, and some of these brokers, the way they operate. The funny thing is within the crypto space is that the very thing that seemed to be a benefit with crypto, where, and it is if you're putting money into hard wallets and all of that, but I'm talking about if you're trading on an exchange, then or certainly the attraction to a lot of people is that it's decentralized, getting it away from all that regulation, and yet it needs to be regulated because we're now in a situation, or that market is in a situation where it's losing credibility again because of some of these things that are going on, and um, and that's where I think that ultimately there's going to need to be some form of regulation, because we can't have people losing their shirts on some of these investments, or even within the context of losing their money at exchanges as well. So anyway, that's my very what's the word, um, uh, uneducated view when it comes to that world. But from afar, that's what I'm seeing as an issue. And obviously, there's way more going on than that, but that is one of them. And so, no doubt there will be a lot of people who are trying to get their money, access to their money, and they can't. And as always, it's the investors who who lose out in the end. So. Yes, AJ, it just, is this another uh, WorldCom Enron type situation? For those of you who remember WorldCom and Enron, is it, was it that that it had been insolvent for a long time, as you say, and it sounds like it's a one big fraud. So it happens. It does happen in the stock market, as we saw with Enron, and so it does happen. So, all language, please, Noah. Let's keep the language clear. I understand your sentiments, but yeah. Um, Apparently, he was forced to trying to take out competitors and then dumping on the public. Yeah. Oh dear. Prison for him then, Ben. I'm still laughing at Noah's comment. Well, yeah, Ben. I mean, this is the thing. I mean, I'll talk a little bit about the charts right here on Bitcoin. I don't care about FTT itself, but um, it it might make people again realize the value of proper trading on assets which have deep liquidity and can't be manipulated and all of that. Although people still have conspiracy theories even about the forex markets, and to an extent, the forex markets can be moved by the market makers, who are the ultimately the banks. But but nothing like what we see here. Your money's safe when you've got it at brokers and all that. So I'm quite happy trading stock indices and FX and some commodities, and but then I'll miss out on some of the upside. But I can plod along making enough money. So without trying to get rich too quick, and the promise of all that, and that is good because I know that there's amazing gains that people have made, but I'd rather feel safe at the same time. I don't want the prospect of making, of putting, 100,000 into an investment and it might turn it into 1 million, but it might go to zero overnight, and that I can't do. So, I'll carry on plodding along, and I'm okay with that. Well, let's have a look at AJ. Let's have a look at Bitcoin chart here first of all. So I take this out to just zooming it right out. You can see I've got this longer term trend line on, which I'm sure many of you will have on your charts. Bitcoin broke through that, but only in a sideways manner. What I think is quite interesting that's gone on today, this is, it's not a conspiracy, but this is like a classic flush, isn't it? Well, it'll be what I think will be interesting is to see how Bitcoin gets on in the next couple of sessions, I guess. But this might take time to play itself through. But certainly, no doubt that there's going to be investors and traders who have had stops below these lows of September and October, who have just been taken out on that. And so, from a traditional trading sense, the market has done a bit of a job in taking out some investors down here potentially. I don't know if it is going to go straight back up yet. I'm just saying that we will find. Only time will tell on that, but we might find out. We might find out soon-ish. Let's put that over there. Let's go to that. So, what my views though? Oh, you're asking in terms of macro. Sorry, AJ. But let's start off with the technicals first of all. I've actually been a bear on Bitcoin for quite some time overall. A bear, but always open to both sides. And I think you need to be in whatever investments that you're involved in. But partly because I feel that the market needed a flush out. And I think the market has had a great flush out really since late last year. It was just getting ridiculous. You can't have people who work in coffee shops quitting their jobs because they make more money, you know, buying, some altcoins. It's stupid. And this kind of stupidity is what goes on at market tops. We've seen it in stock markets, we've seen it in property markets, we see it in all asset classes. So when you start getting to that stage in a cycle, then it's just getting silly. And that's what we were seeing. I'd have friends of mine who run companies and they're losing staff or were losing staff because their staff were saying, oh, I think I can make more money buying and selling cryptos. These people don't know how to trade. They've got an app and they're buying and selling on the app and whatever. They don't know how to trade. They don't understand the markets. So so I felt that we needed a flush out anyway. Okay, and we've had that this year. So we certainly have flushed out a lot of the weak hands in the market. It's just a case of whether we need to go that little bit lower. There was a lot of people, as you know, when Bitcoin got down to the 20,000 area. Of course, that was if we take this out to maybe a monthly chart here. When we got down to this 20,000 area, actually, I'll take it to weekly and zoom it back out. Yeah. When we got down into the 20,000 area, we knew that was obviously an important area, being the 2017 highs. So it has stopped and paused there since earlier this year, since June time when it came down. So but again, is that too obvious? The 20,000, because there was a lot of people who were buying down there, and I really wasn't sure whether it was going to stop there, and it has done, but it's been a very weak bounce. Now, the only thing at the moment is that my 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 more short-term personal view is I would quite like to see the stock market still bounce a little bit more, even though my medium-term view is I'm quite cautious towards the stock markets. Um, in the near term, I think the stock markets have got potential upside in them, and we've seen Bitcoin, Ethereum being reasonably correlated, of course, to stock markets, although of late, or the last few traded sessions, less so. Forget today, but so from a personal perspective, I would quite like, even if the stock market's bounced in the near term and Bitcoin goes up, if we see the stock markets roll back over again, then yes, I'd like to see Bitcoin down at 13,000. I think that would really clear out a lot more people. Um, but I'm not active in this space myself. I don't trade it, so I'm giving it a very, you know, unbiased view because I'm getting another message from live support here. Oh, that's fine. So getting a very unbiased view. I've got one, so I'm trying to do two things at once there. Because I don't have a vested interest in it. I don't care particularly if it goes up, down, sideways. The only thing I care about is, when we're using Bitcoin as a proxy here, um, is about market sentiment in general, and that's what I'm trying to get in. I want to be involved in something. If I want to be a buyer of this, I want to be a buyer in this when more and more people are saying to me, "Oh no, Charlie, don't get involved in cryptos. It's a con. It's oh, I just lost loads of money." When I'm hearing people talking like that, which I'm not, by the way, at the moment, but when I do start to pick up, that's the sort of sentiment that I want to be hearing. When where if I wanted to have a dip my toe in the water with it, then I might well do then. But in the main, I'm quite happy having my main money. I feel so much safer trading my own money rather than just putting it into a crypto and then just sitting on it. If I was going to buy anything, it would be Bitcoin or Ethereum because they are that much safer. Um, but but they are volatile, as we see as well. So I guess it's like, well, if I put a small-ish portion of capital into that, well, man, and it doubles, trebles, or whatever, it's only a small part of my capital. So I'm never going to make huge amounts of money with it because I would never put a huge amount of my capital into that. I'll trade my main bulk of my capital because that's the safest place that it can be, is in my hands, actually trading it with control. Whereas just buying something like this and holding on to it is fine for many people, but it's not me. I've been in this game for 20 odd years, and I would rather be trading. Now, I can obviously trade. I could trade these markets, um, but I'm not interested in. I don't have no real desire to want to be trading them. I'm quite happy trading the fiat currencies that I trade, and if I was going to do anything, I would be buying and then trying to hold on to these for a while. So at some point, yeah, I probably will buy some Bitcoin again or Ethereum, but I'm not too fussed at the moment. Quite happy to see it going higher, but really, I want to see that final flush. I want to pick up on that kind of sentiment I've just talked about. Uh, Venka, yes, exactly. Appreciate what you're saying there about, well, we'll find out. We will probably find out, I guess, what Bankman-Fried actually has got up to when he goes to jail. So let's hope so anyway. Ah, Michael, how are you? Am I still bearish euro dollar? Think more retail traders are short now, so guess you may be bullish. Yeah, I am bullish. You've got to bear in mind, Michael, you know, I I'm like you, Michael. I'm trading, so I'm trading these markets. So I'll be bearish, I'll be bullish, and it changes. I've been on both sides of the market here with the likes of the euro dollar. I've been I've traded it a lot on the downside this year. Um, and I was bearish right away down here, but then got stopped out. But then and then turned bullish. So I've been basically bullish since then. So I'll tell you what happened, Michael. There was two things. One was the 13th of October. So I think I was short going into that. Yes, that's right. And then the euro turned around, which I thought was interesting. Was that on that day? That was the last CPI. It's CPI this coming Thursday out of the US, and so that inflation figure was on the 13th. And what happened was, we all know, was that we had a really hot inflation figure, but the markets turned around. They did the opposite of what one would have thought. So I always take a bad news day, a day which should be bad for the euro, and same with the stock market as well. Bad, what should have been bad for stocks. If I take this back to the S&P, there it was here on the stock market. I was in London presenting at a bank that afternoon, and it was, and the initial reaction was to the downside, and then it just turned all the way around. So a bad news day which turns up, then you sort of have to pay some form of attention to that. So yeah, that's how I looked at that. But I'm not going to say that through all of this I've not had stop outs, because I'm always having stop outs. Like I said, I was short the euro into that, but subsequently changed. But even when I got on the long side, euro did this deep retracement and stopped me out on that. So, but I am long currently euro dollar, Michael. Yeah. Um, I've got a load of analysis behind that. It's not just based on what's going on the daily charts, of course. There's a load of analysis there. So, but as you know, Michael, I've got big picture views, and so I have big picture views for both the bullish scenario for the euro and for the bearish scenario. So I'll just go with the price action to an extent, with the likes of the euro, but it's the same, with all the currencies. So um, the nice thing of having bigger picture views is that in the short term anything can happen, but at some point your next big trade's going to come along, and um, you know, and that's all I'm interested in. I'm not, as I always say, I'm not interested in being right, trying to have a high win rate. I'm interested in having a higher profitability, and for me that comes from actually having lots of losers, but when the winners do come in, then they're that much bigger, and then I'll try and milk the winners as they go. So that's generally what I try and do. So anyway, lovely pullback in that descending trend channel. Yeah, well, we've sort of broken out of it now, but I think there's some interesting markets here. I won't just talk about that. I think gold's interesting right now. Um, that that broke out of this trend line, didn't it? So here, so I think gold's interesting. I think silver's interesting. Silver's had a great bounce here as well. there's a lot of markets that are really interesting right now, and I'd like to see have more upside. Gold, silver. Um, I think the dollar index is fascinating. If we go to the dollar index here, again, it's another market which has got this trend line on the daily charts, which is now broken. We'll have to see if that's going to really follow through, but that's what I would like to see. We've got stock markets, I think, fascinating. The Dow is fascinating, Michael, especially talking to you about the Dow. We've got this lovely trend line, as you'll have, and the Dow's sort of breaking through that, breaking clear. So I've got a load of uh, analysis that I've done on the Dow going all the way back to the 1960s, on what's going on there in the stock markets. I think the bond yields are fascinating at the moment. It's all fascinating at the moment. It really is, and this is what we do a lot in the trading room, as Michael knows. Um, but yeah, this is all fascinating stuff. Seeing bond yields, or keeping an eye on those 10-year yields, um, as well, and that all spills over into these other markets as well. So they're all interrelated, and so my job, what I'm doing, is trying to put all those pieces together so that to help me formulate trading decisions. But I just think we're in a very fortunate time, whether you're whatever markets you're looking at, and I say fortunate time, but I mean not a fortunate time as in, the cost of living's gone up and all of that. I'm not talking about that, because obviously that's not. But what I mean is, as traders, if you're a trader, then this is a good time to be trading, because there is volatility. And I'm not talking about crypto. I'm talking about more traditional asset classes like stocks or stock indices, as I will trade, some of the commodities. Obviously foreign exchange as well, and so there's a lot going on, as a result of the uncertainty that we've got globally. Then it does produce more movement in the market, and more movement equals more opportunity, I guess. And that doesn't mean to say that um, we have to be going off and just taking dozens and dozens of trades all the time, because that's not what I'm doing. But um, this is why I do the trading challenges, so that people can see what I'm doing with those. And a lot of the time I'm just in singular trades, but then I'll just build the position within them. But I could trade lots and lots of different markets, but a lot of the time I don't feel like I need to. So, but lots of our traders, they'll be in different markets. But anyway, it's just nice seeing um, the markets moving around the way they are. The flip side is, what's not nice is that the reason that they're moving around nice a lot is because of all the global uncertainty. So I do think that's always the dilemma of an ethical trader. There's lots of unethical traders who don't care, but as an ethical trader, you've got this dilemma between, on the one hand, you want market volatility, which suits traders, but in order to have market volatility, that usually means you've got to have um, a bit of uncertainty. Something must be going on in the world. Recessions, obviously, as we know at the moment, we're in an inflationary outlook, and looming potential recessions, and that's not nice for a lot of people. So it's weighing that up, but you sort of have to say, well, during the good times, the average Joe, they just have their money sat in the stock markets, and they're making loads of money, aren't they? Just sat there with their pensions and the lights, and I say loads of money, but they're doing quite well. So they do well a lot of the time anyway. We come into our own more so. Look, we still make money in the good times. That's the good thing with being a trader, is you can make money through it all. But the potential to make more money in higher volatility periods is certainly there. What we have to, so I'm just checking the camera there. What we have to be careful of is, yes, the opportunity to make more money is there, but we still have to have some form of restraint as well, and risk management to to make sure that we're not getting overly excited, because then you get overly excited and you can go and lose a lot of money trading on the back of that. um, AJ, speaking of milking winners, do you have any tips on managing your existing trades to know whether to continue to hold or get out? Yes, I'll come back to that because I'll do that. Um, and do you expect this sort of volume to continue into December? I know naturally during December it typically slows up, but not sure to expect this time around. Um, well, and what's your take on dollar yen? I will answer that as well. So, firstly, let's come back out. Let's use the euro dollar as a proxy here for, as you've just sort of said about end of the year, December. Let's go and have a look at last December. So when we went into the Christmas period last year, you can see that the euro dollar was pretty choppy. So it wasn't doing much through December. It started really from sort of the beginning of December and then chopped around for much of it. But um, in actual fact, a lot of Decembers, there's some nice moves. I think it's a bit of a myth. I mean, if you look at this, that's a nice overall move going on through December there of 2020. If I go back another year into December, nice movement all through December. So I think it's a bit of a myth when people think that you get to December and not a lot's going to be going on. It is true that there's going to be periods within December and during the Christmas period whereby, certainly if we look at stocks, if we looked at something like the S&P 500, then it can chop around. So if we go back into December of last year, there's still plenty of movement. Still plenty of movement here through December. Up, down, up again. So yeah, I'm not a mass. It can do. You can have periods within that. So there's a period here where it chopped around, but I'm not. I'm not. And volume may fall off. Your question was about volume, so volume may come down, but that doesn't really affect an individual trader. The markets quite often will still move around for good periods during December. So I never take December off or anything like that, or stop trading because there's always the potential for moves. There's always that period between Christmas and New Year can go obviously very quiet, but outside of that, it's not that bad. If anything, it can be quite good, and especially like you say, this year, um, the markets won't stop moving around when we've got all of the um, global events that are going on now. Anyway, so that's that. Um, Do you have any tips on managing your trades, your existing trades, to know whether to continue to hold or get out? Yes, go up the time frames. So it doesn't matter whether you're looking at a 5 minute chart or a daily chart. Um, if you're on a 5 minute chart, you're only seeing what's going on a 5 minute chart. You're only going to see um, technical levels off a 5 minute chart in order to run your trade to. But if you went out to an hourly chart, you all of a sudden you see more, and you might say, "Oh, that was only a micro level there. There's this big level up here, which it could well be that price is trying to go to that." So you need to take that bigger view. So whatever your time frame of reference is, like I've said, if you're trading off of 5 minute charts, then use an hourly chart as an anchor or a 4 hour chart as an anchor chart so you get that bigger picture as well. If you're looking to run trades further, but and likewise with higher time frame charts. So if you're using dailies, then you really need to be going out and looking at weeklies and monthlies as well. Um, and that will then tell you whether it's worthwhile running your trade further. Let me give you an example. So if I come out to back to that euro as an example, now when I was trading the euro on the downside, um, back here, the last profitable trade on the downside I had, this one here got stopped out, but was this lovely final, what I said, a final run down into the 96 zone. Now, if I'm looking at this daily chart here, I would never have known that there was a level down here at 96. It was at 95.50. In fact, I exited my final position at 95.57, I think it was. So right down the lows, right down here was my final exit because of this horizontal line. Now, this horizontal line I would never see on this chart if I only kept it on a daily time frame. But when I come out to a 3-monthly chart, so a quarterly chart, then by doing a bit of time frame analysis, so this is where I exited down here, because this high here in 2001 and this low here back in 1988 or 9, I think it is 1989. So just by doing a bit of time frame analysis and going up the time frames, that can help you. So if you're short, you can say, well, actually, there's a really nice level that it might want to be coming into this zone here, and that's what we were targeting down there at in like I say, around that 96 zone. So yeah, it just comes down to time frame analysis. Basically, is the short answer to your question. And that's what analysis is all about: analyzing, where a market may be trying to go towards. Sometimes there has to be a bit of macro analysis going into that, or fundamental analysis going into that as well, and sentiment as well. Sentiment analysis is very important to me. But most of that stuff is done at outset before I get into the trade. If you start trying to do that once you're into a trade, you're doing it wrong. People spend a lot of time and energy on trade entries, but they don't spend as much time and energy on exits. So when you go into a trade, you should already have a good idea and a plan for where you might be exiting. So the analysis all comes before you even take the trade. So because once we get into a trade, we become we have more bias, and so we're never going to see things as clearly. Greed might take over. Oh, I think it might go high, I'm going to hold on. That's just you're making decisions as you go along, and that's not good. You should have a framework, a clear plan at outset with your analysis of the take profit levels that you're targeting, and stick with that. So it all comes in at outset. What do you think about the stocks coming period, particularly Amazon, which corrected almost to the COVID lows? Lance, let's have a look. See if I've got Amazon on here. I think I have. There we go. So let's now take this out to a monthly chart. Okay. So this is a monthly chart of Amazon. And the question is, what do I think about? Well, you've asked me about stocks, but particularly Amazon, as you said, which has corrected to the, yeah, okay. So there's your 2020 lows there. What do I think about it? I'm just going to have a look at the 3-monthly chart as well. Okay, there's a couple of observations here, and you've got to bear in mind, Lance, if you're just throwing a chart at me, then I'm only taking a a 60-second look at it. But in the main, obviously, it's been in a wonderful upwards trend. However, we've seen, of course, a fair bit of destruction this year. But like you say, all it's done is taken back those gains from COVID, it's still a stock which has done incredibly well over the years. Um, but I think the thing is as far as I'm concerned, with within the stock market, I'm still overall bearish on the stock market. So um, if you ask me about an individual stock, especially a bellwether like Amazon has become, I'm still going to look at it overall with a slightly bearish tilt, because if the main stock markets, if I believe the main stock markets are going to come lower, then it's likely Amazon will do as well. But it doesn't mean to say in the short term that it couldn't come up, because I would like to see the stock markets come up in the near term, as I've already said. And if they are coming up, then we could well see Amazon start to bounce a bit. But tech stocks, this comes under that. They have underperformed, and so. But even so, I would still like to see a bounce in the tech in the Nasdaq as well. Obviously, Amazon's listed elsewhere as well. But from a technical perspective, yeah, it's come back into this cluster. It could find some support in this region. It's had a really good run down, so yeah, there's potential there for a bounce. But um, I'm not convinced at this stage that the overall downside in the stock markets is done. So, but don't get me wrong, I would love to see a bounce for a couple of months in the stock markets. That's what I would love to see. I'd love to see a bounce for 6 8 weeks, taking us into the new year. Would be my preference, because I think the market needs to work off some of the pessimism that's out there, and sometimes in order for a market to go lower again, it needs to work that off. It needs to attract new buyers in, just before the next rollover again. That's just the function of the market. So we could certainly do with a bounce, or at least holding up for a period. So I would like that that pessimism to work itself off, and that will do it by the markets generally holding up for a period. But whether they do or not, I don't know. But that's what I would like to see. There are some potentials out there. As we know, there's been speculation since last week about China changing their policy towards COVID. That's not going to happen this week or next week. We're looking at well into next year, before they actually maybe do start to make those changes, about March time of next year. But the market is already speculating about that, and so if the market gets a grip on that, then again that could help stocks, at least in the near term there. So at the moment, yeah, it could bounce at any time. It could bounce at any time. But looking at this, I'm not seeing anything in particular that's um, any particular reason why it should, but it could do. It's into a decent enough area of support, but you know that's my overall view on the stock markets. And so that, even if the stock markets go higher, yeah, Amazon could get dragged up with it. But at some point, I'm looking for those stock markets to then roll over. But I would love them to hold up for a couple of months. That would be, going back to the S&P here. I'd love to see the S&P go higher, over a period of a couple of months. So we'll have to see. Well, AJ, if you're targeting 3R, and yeah, I mean, if you're saying that it's leaving money on the table, but you also there's one thing you have to also accept. That's what you see. When we all see the times when we have a profitable trade, and it goes up, and it ends up going long beyond where we exited. One thing to bear in mind is that if you started to look for, let's say, 5R returns, the trade-off is that your win rate will come down. The trade-off is that and that's absolutely fine. But that's just the way it works. You're not going to have the same win rate if you look for bigger returns. It doesn't work that way. Because the longer you're in a trade for, so if you've got into a trade here and you've targeted and your 3R is here, and there was 100 trades that you took with this set of parameters, and out of those 100 trades, a given number are going to get to that 3R target, and some of them will carry on going higher, but quite a lot of them might just get up into that sort of zone and roll over. So if you are all of a sudden targeting that higher R multiple, you have to accept that there's going to be some of them are just not going to quite make it, and they'll roll back over. So, and there's nothing wrong with that. It's just that's the trade-off. Is the bigger the return on a trade that you could potentially get if you're looking to hold on to your trades for longer, then the trade-off is a lower win rate by default. That not every trade is going to go that far. A lot of them might go this far and they roll over. So you have to accept a lower success rate or win rate to go with that. Anyway, anyone else got anything to chat about? God, it's 20 to 10. I should be in bed. I just thought, oh, come on. And I know it took a while getting going, but I just thought I'd come on and have a little chat. So yeah, looking at it, we've got this inflation figures out this Thursday. We've got inflation out of China coming out overnight. I'm in the UK, so coming out in about 4 hours, 5 hours time. And obviously we've got this little thing called the the midterm elections over there in the US. But for me, my money's on those big inflation reports on Friday, and this speculation on China as well. So there's all this stuff going on. And so my preference is I would love to see these stock market indices going higher in this shorter terms. That's what I'd like to see. We'll see. Yeah, that's the trade-off, AJ. So therefore, there's nothing wrong with a 3R return. That's a great return. So if you're not ready, like as you say, psychologically for the lower win rates, then you don't have to. And so you don't have to go for those. I prefer that personally because I enjoy the challenge of holding on to trades for longer. I get a buzz out of that. That's why, for me, trading, as I often say, you may have heard me say on YouTube videos, it's not just about making money for me. It's a mental, I enjoy the mental stimulus. I don't get mental stimulus from getting into a trade and holding it for, 1 to 2. Some trades are only 1 to 2, but I don't really get any. It's not a mental challenge for me on that. But the longer I hold on to a trade, then that's more of a mental challenge, and I enjoy that. So trading for me is as much about the challenge of pitting myself against the market as is anything else. Well, yeah, I mean, I would like to see the S&P get through that, Michael. This trend line, I would like to see a bit like the Dow's already got through its one. I'd like to see it get through it. I don't know whether it would be very bullish or not, to be honest. I think that if we get up there, it'd be nice to break it, but quite often we break trend lines and then completely foul and roll back over. So from a technical perspective, traditionally you would take that as a bullish sign, but I don't know. We'll have to see what the economy is looking like. It depends on the S&P could get there in the space of a week in theory, but I would be wanting to see as and when if the S&P does work its way up there, or even especially once it's broken out, is, what's the speculation at that point? I think what the speculation is all going to be about is about China opening up, and I think that that could create some strong tailwinds there for stocks. But we're going to have to see these inflation figures and what goes on with inflation. Inflation can get sticky and entrenched. So even if those inflation figures come off a little bit this week, let's say they did, we could still see in, March or whatever, April, that inflation starts rising again. And then all of a sudden the market then is not happy. So I'm not 100% convinced that stocks are just going to go up to new highs in this market environment. But we'll have to see. It's this trade-off between the economy, of course, as well, and the effects of the central bank tightening on the economy. So it's not for me, it's not as straightforward as just purely the technicals. I'm trying to take everything in, but yeah, of course, that would attract a lot of buyers in, and that's the sort of thing we need. Like I said earlier on, we need to see a lot of buyers coming in. In fact, I'll throw this at you. I think the Dow could go and make new highs, and then still end up selling right off. But that's for another discussion for another time. But anyway, I'm not trying to trade these and hold on to them most of the time. I know I've had a decent run on the downside on the Nasdaq through September, but and into October. But I'm not trading the stock indices. I'm observing them, and I'd like to see them go up, but I'm not massively bothered about them. I've got my chips elsewhere. But anyway, I thought I'd come on for a quick chat, and I've probably, because I was messing around trying to get the sound working first of all, because I didn't click on this properly. I think I need to go and unwind for a little bit before I need to get off to bed. So thanks ever so much for coming along. There's still 18 of us here, and having a bit of a chat with me. I just thought I'd turn it all on and see who was around. So I'll leave you to it and see you as and when the next videos are all going out tomorrow and Saturday. I've already pre-recorded them this week. I've got 2 videos already pre-recorded. What have we got? Tomorrow's one is, should you quit trading? So yeah, that's not a morbid one, is it? I like talking about the downsides of trading, as you know. But yeah, that's what I'm doing, or that's being recorded tomorrow, because some people probably should quit trading, But what I'm really trying to say in a video like that is you've got to have that tenacity to keep going, and because the rewards are there in trading the longer you do it. Anyway, I'll leave you to it. Enjoy the rest of your evenings or days, and I'll see you soon.